BizBeat, the insight you need. I'm Lily Lu. While the failure of Silicon Valley Bank has prompted fears of a broader upheaval, a plan to get the bank up and running is of paramount concern. Governments in the US and Britain are now taking extraordinary steps to prevent a potential banking crisis. On Monday, the Bank of England and UK Treasury said that they had facilitated the sale of the bank's London-based subsidiary to HSBC, ensuring the security of £6.7 billion worth of deposits. The risks of broader contagion seem to be limited for now, but once confidence is shaken, capital markets jitter. US President Joe Biden sought to calm market and taxpayers' jitters on the same day, saying that Americans can have confidence in the banking system. On Tuesday, Silicon Valley Bank's new CEO sent a letter to clients saying they are conducting business as usual and that all existing and new deposits are protected by the FDIC. How did a bank collapse in 48 hours? The California-based bank ranks 16th in size among American banks. It has approximately $200 billion in assets and was the go-to bank for many American tech startups and venture capital firms. Ironically, just days before its implosion, it was congratulating itself for making Forbes magazine's annual ranking of best banks in America. Analysts point out that the root cause of the bank's failure is due to the interest rate hikes by the Federal Reserve. In booming times, SVB had a lot of customer deposits coming in, which they bought large amounts of government bonds and mortgage assets with. However, with the Fed's drastic rate hike measures leading to a plunge in the value of bonds, the bank suffered and sold assets at a loss. This caused panic and triggered a bank run followed by a capital crisis. Almost no bank can withstand a run, even the 16th biggest bank in the US. Depositors and businesses that are in panic will speed up the transfer of their assets to larger banks that are deemed too big to fail, leaving small and medium-sized banks to suffer a domino effect. This has turned out to be the second largest banking bankruptcy in the US history after the Washington Mutual Bank case in 2008, which was swept by the international financial crisis. Would this also be the beginning of a new cycle of financial crisis? Is this going to be another Lehman moment? Well, the blow was not only dealt onto the banking system, but also the real economy. For starters, Silicon Valley Bank has about 8,500 employees at the end of last year. As for clients, many companies have parked far more than the deposit insurance limit of $250,000. If they cannot withdraw the money, they would then have troubles paying salaries, which may lead to layoffs and even bankruptcies. When people are not getting paid, they will have to consume less or result in defaults or other financial woes. A financial turmoil could ultimately leave a serious impact on the US economy. SVB's failure casts doubts on the Fed's competence. The Fed now faces a challenging task in managing the trade-offs involved in balancing inflation and economic stability. Many analysts are expecting Powell to announce a hold on rate hikes while pending a thorough risk analysis on the implications of such measures to the soundness of banks. Others suggest the Fed take a more moderate approach in raising rates, giving financial institutions and businesses some time to adjust. One thing is for sure, that the US economy is closely intertwined with the global economy. Any major crisis in the US can have a ripple effect on the rest of the world. The potential collapse of smaller banks and financial institutions in the US could lead to a loss of confidence in the country's financial system and consequently a decline in investment, trade, and employment across the globe. The 2008 financial crisis was a perfect example of how a US financial crisis can turn into a global one.